The next questions, I'm sorry. Uh, I noticed that there is another product of Islamic finance, such as a pension fund, which is using Islamic finance. Is it right? Pension fund.
The
in
pension
Turkey?
funds that you mentioned, Prof, they also follow Islamic principles, right? Yeah.
Yes. The pension fund is a product which involves a huge number of funds. So how government or treasury manage this fund so they can give return to the depositors? How to manage pension
How
fund?
do they manage the funds? Basically, how the pension funds are normally large, Prof, so how do they manage? That's his question.
That's fine. That's all. Thank you very much.
Thank you. Yeah.
Thank you. Let me start with pension funds. I guess you asked this question since I said the government is supporting, giving incentive 25%. The pension funds are private companies. It can be done conventionally or Islamically. What is the difference? If you make it Islamically, what you do, you collect the savings of the people. These are not usually completely defined contribution pension funds. Defined contribution means during the period, for example, 20 years, 25 years, the subscriber pays some premiums, some amounts to the pension fund. These are invested somewhere, and the return out of this pool is paid to the saver when she retires. But you do not promise any defined benefit in the beginning. This is defined contribution, not defined benefit. The benefit depends to the outcome of the investments. Now, when we come to the practice, for example, if you want to save 1,000 here, let's say, ringgit a month, and you promise to pay that amount to the pension fund. If it is an Islamic pension fund, the pension fund will use your money, will invest your money only in halal places, like shares of companies which deals with halal business, no alcohol, no pork, no interest, okay? And the government gives the private pension fund which you subscribed 250 over your 1,000, and your 1,000 becomes 1,250. It is given from government to the private company, transferred to the private company. But the private company, you the subscriber, you cannot draw it from the pension fund for 10 years. Okay? This was the second question. First question was about? Huh? Yes. One of the functions of the central banks is to supply liquidity to the economy. The central banks supply liquidity to the economy. This happens through open market operations. That means the central bank gives money to the economy using some papers that is called government bonds. Those who have government bond in its hands can bring government bonds to the central bank and get cash, liquidity. This mechanism depends on interest. Why? Because government bonds depend on interest. And when central bank gives money to the bank, liquidity, it is also interest-based. Therefore, here there is inequality of opportunity. Since participation banks, Islamic banks, cannot keep interest-based government bonds and bring it to the central bank and get cash. Now, what the Turkish Central Bank does, as interest-based government bonds, if a bank brings Islamically issued instrument as sukuk, will give cash. This is the new part. Before, it was not possible. Now, if, for example, one of the participation banks bring an instrument, a financial instrument, issued depending on Islamic or interest-free structure, can get cash.
Does that answer your question? Thanks, sir. Prof, I think you're also in here. So if you have any question, you can ask Prof later. Just one last question from me, Prof. I saw on your slides just now, you put 26% as the asset share of the Islamic banking, right? But the growth is only 5%. I mean, not the market share. Why is that so? The asset share is almost 25%. Yeah, 26, you mentioned.
5 to 6. Why low?
Yeah. Why the market share is very low, 5% only, when you have the asset share is quite large in Islamic finance?
Thank you. Good question. Because the banks can also give funds to the customers out of their own capital.
Okay.
Shareholders funds. Therefore, in the first one, the 5% is the loan, but 6% is the things given. Think as balance sheet. One side total assets, other side liabilities plus owners or shareholders equity.
26.
Always liability is smaller than total
Asset, okay. All right, Prof. Thank you so much. You like to ask? Pardon? 26, the asset share of the Islamic banking, the entire. Oh, the growth rate is not the growth rate and not the share itself. Okay.
He says that there is 1% difference.
No, Prof. No, yeah. Yeah, asset share in this thing, yeah. So it's not the asset share, but okay, growth rate. Okay, all right. It's not the share, but the growth of it. Okay, all right. Okay, that explains. So thank you. So I think we end here. So I'd like to call upon Mustafa Hamad, whom we affectionately call as Papmus, to give you some small token of appreciation, Prof. Yeah? Salman, can you please take that?